Joe, you want to take that one?
Yeah, no, I'll take that one. I think the number one misconception that most business owners have when it comes to tax planning is waiting till the year is over. Because once the year is over, that really limits the amount of tax planning that you really can do. Because a lot of these plans need to be implemented throughout the year.
When somebody new is coming in, are you telling them, like, if it's, hey, they're coming in now, it's May, and hey, well, I need to get prepped for 2025 taxes, is now still a good time to come in? Or do you kind of have different deadlines of saying, here, I can only help you so much because you've come in during Q2 or Q3, all of that?
Yeah, there's definitely opportunities that are still available. In California and a lot of states that have state income tax, there's something called the pass-through entity tax deduction. And we see a majority of tax returns miss this. There's a state and local tax cap of $10,000, where on the personal side, you can only deduct up to $10,000 of state and local taxes. Through this pass-through entity tax deduction, you're able to pay those personal taxes from the business side and recognize them as a tax expense. So you're not limited by that $10,000 SALT cap. And so June 15th in California is the deadline to make your initial estimated payment. And it's a separate estimated payment specifically for this type of deduction. And so right now is a perfect time to be able to get in front of business owners so that they can take advantage of this. After that deadline, different states are a little bit different. So California is a little bit more strict, but there are other strategies to implement. But like Joe mentioned, the closer you get to the end of the year, the less opportunity there is. There still is opportunity, but realistically, the earlier we start, the better.
Nice. Cool. Another thing is, so many business owners kind of piggyback on this. They think about taxes, like you said, at the end of the year. And how are you guys educating people when they do come into the end of the year for the prior year, of just starting to teach them about how it's relevant to stay on top of, hey, we're planning for 2025. We need to meet this date, and this is why. And do you guys put together a plan to say, these are kind of the different milestones that we want to meet with you, and these are the things that you want to go through? So you're evaluating where their company is and making sure that you can capitalize on any tax credits that are out there or different strategies.
Yeah, so I mean, the way that we usually set it up is, so if they came on later in the year, then we would file their, say, 2024 tax return. And then going into 25, then we would start setting up all the different meetings on that quarterly basis. So usually they correlate with the estimated tax payments.
Mm-hmm.
So it'd be like April, and then we'd go to the next quarter. So that's kind of like the cadence that we like it on the tax side. And I think after the first year, then the business owner starts really getting into the whole cadence and how it works. And then it just becomes simpler and simpler. And then we get to do more strategies and implement different types of strategies as time goes on.
Gotcha.
Yeah, and to give you an idea, we're in Los Angeles, so we have a lot of entertainment industry clients. And a couple of years ago when they had the strike, we had proactively been meeting with our clients in that industry. And towards the end of the year, especially clients who were newer, a lot of times people are doing their purchases at the end of the year. So like a rental company who's buying like $1 million worth of equipment, along with like their G-Wagon type purchase at the end of the year, for the deductions, we're looking at it and seeing, okay, the delta difference between 30% maybe marginal tax rate in this year versus 50% next year. If you can wait a few weeks to make those same purchases, you're going to save an extra $200,000. And so to be able to shift around how you capitalize or purchase items, you need to have your bookkeeping up to date. You need to be proactively meeting with your clients. You can't do this in January, February, March and say, oh, we should have waited a couple of weeks. To me, for us as a business, it's our way to protect our firm, because I don't want clients coming up to me a week after, 2 weeks after the year ended and say, why didn't we do this? It's really incumbent upon us to be able to give that proactive advice, because business owners are running their business. They don't really know about it.
Exactly. Yeah.
And there's a lot of almost training that everyone has had, and we're kind of untraining people to realize it's not something you panic and do and light your hair on fire, March, April time period. It's something that we can do throughout the year. And I tell, especially newer clients, like worst case scenario, we break your heart in November, December, and you know what's coming.
Mhm.
Best case scenario, we've been able to mitigate throughout the year, through different opportunities, but at least you're prepared.
Yeah, no, that makes sense. And you see that a lot of just the traditional way of how taxes and CPAs used to work too is, hey, expense everything at the end of the year, whether you need it or not, and how ways that you guys are doing things in the newer generation of CPAs, it just is taking just a different route. And I feel like there's so much more value in that. And even like the CPA I work with myself with tax planning versus what I had in the past of, hey, it's February 30th, send it over and send a hard copy. Mind you, no, we don't have portals, and we'll get this going for you. I'm like, okay, yes. So looking into that, how has technology played a big role in how you as an accounting firm function, but then also how you're providing services to your clients?
So I would say the number one, I'd say technology change that was very helpful was when QuickBooks went from desktop to online. It gave us the ability to be able to see a client's books simultaneously instead of having to get remote access in. It's a lot easier for us now to kind of see the client's books, and which is important because every quarterly meeting we want to see the client's books, where they're tracking at for the quarter to do the planning for the year to make sure. So I think that's probably one of the number one advantages of cloud-based and where technology has gone.
Mm-hmm.
And I mean, and now I think on the tax standpoint, I think even the tax providers are seeing it, and they're trying to increase their efficiencies on the tax season and making it so that way. I think going forward, I think it'll be a lot easier to file tax returns, where it could be like a click of a button come January, February, and the business tax return is done. And now it's just finishing off the individual return come April.